I think we are live.
We are.
We are live. Excellent. Well, Rebecca, thank you very much for joining us on the session today. I'm really excited about this one as well. All the speakers have just been absolutely amazing. I didn't realise when I set it up, because in my group people were asking for some different things at the start of coronavirus. So some people, obviously very worried about different things. So people were needing some support with habits or food or relationships or their kids at home or money. And there was so many diverse topics. So I'm delighted that I was in a position to introduce all you amazing speakers into the group, and I've had some great feedback. People are really enjoying it, so we can't do it without you guys. Thanks very much for supporting us.
Oh yeah, definitely. I'd be talking to myself otherwise.
That's very true. I know we need the people to listen so that we can show up.
Exactly.
So I'm going to hand over to you. Rebecca is an amazing independent financial advisor, but amongst other things too. So I'm going to let her introduce herself and go over to the session. I will be in the background, but I'll take myself off video so that it's not confusing on the small screen for anyone on their phone. And then if they ask questions, like I've done with other sessions, I can interact on my tablet and I'll come in at the end and we can see what everyone's saying.
Fab. That sounds brilliant.
Yeah, thank you.
That's great. Well, if it's showing up slightly different for people, that the reason being is because I'm on my mobile phone for the camera and my laptop, which is just in front of the camera for this screen. So apologies for the confusion. It was just how I had to make tech work today, and it seems to be working. So don't mean to confuse anybody. So this talk is future-proofing your finances. So I like to be quite direct so that people can get what the best out of it, but I don't want anyone to take offence. That's the first thing to say, because I want everybody to get as much out of this time as possible. Also, quite often if there is something there that is coming up for you, then I'd encourage you to make a note of it. And if you have worked with a coach or work with somebody that you can talk that through with, then I would say that's really important, because a lot of the issues that come up for us in life can stem back from a lot of money stress and money worries. And I know that personally myself. It's happened in a couple of times in my life. One, I got into debt when I was in my early 20s, and once when 3 or 4 years ago I came back from a maternity leave. Everything should have been perfect in my business. It wasn't, and I had about 6 to 8 months of real stress and worry, and it probably took me another 6 to 8 months to, if you like, de-shred, let go of a lot of that worry and stress and fear that I had around money, and it can really hold us back. So if there's anything that comes up for you, everything I say comes from a massive place of love, but I just want to put it out there that it's okay to feel uncomfortable. And it's okay if you've had a really bad time recently. It's okay that everything's great for you at the moment and you're actually doing okay. There's no judgment or positioning that you should be thinking or feeling any differently than where you are is where you should be. So I'll just tell you very quickly, I don't like to listen to presentations myself where you have like half an hour of the person talking about themselves, but I'm literally just going to run through a couple of bullet points so you can see that I've like to think that I'm in the right place at the right time, giving you the right information. So I'm a director and principal of an Evolution Financial Planning, which is a regulated financial services business of 8 years. I'm an independent financial advisor, which means I give financial advice, regulated financial advice around investments, pensions, holistic lifestyle planning. I'm qualified to discuss that. And I've been in financial services for 20 years now, and I don't look it, but I first started as a cashier in a bank when I was 19, and I just had a bank account myself, didn't go to university. I won many awards. One I'm most proud of was IFA of the year 2019. I'm a money coach and a money mentor, and I'm a TEDx speaker. I've done a talk around if women ruled the world, what different place the world would be. And that was from a financial perspective, of course. And I'm author of Evolve Financial Planning for Women. And I think I don't know how many hundreds or thousands, but I've worked with so many people over the years. And there's some links to my websites if you want to go and check those out. So that's a little bit about me. So I'd hope to think that you would know that what I'm saying has come from real experience of working with lots of people over the years. So today's about future-proofing your finances. So some of these things you can do right now. Some of these things might be for you to make notes of and reflect back to. If there's something there that is really much in the future, not just 3 months or 6 months, for example, the great way of keeping a track of that is by putting them into your diaries. So if you've got your phone, make some diary notes or reminders that actually pop up on your phone that make you go and check this stuff out in the future. That's a real top tip, because we make these notes from these courses and things that we listen to, but it's really the action that counts. Now, some of these things might be something for you in the future, and you might think, well, this is not really for me right now. Then I'd encourage you to set a date with yourself in a year's time to come back over this and keep in touch with your finances. They're not just for that 1 minute, they're part of our everyday lives. So I'm just going to go through some core elements that I wanted to share with you today. I do speak quite quickly, but if you have questions, do ask in the comments and I will best to answer them as best as I can, as quick as I can. There's goals, security, choice, legacy and mindset, and I'm leaving mindset to the end, but actually it's one of the most important parts. But I'm going to recap on some issues that people have around mindset and around their planning and their future and their finances, and I'm going to cover that towards the end. Then I'll be doing a summary of some actions for you to go away and do, a bit of a challenge if you like. I always I love to people be taking action, so if you have been taking any action off the back of this, I'd love to hear from you and I'd love to hear what results you got. So first of all, goals. I'd like you to take a moment to think about where you are in this little lineup. So I'd like to think I'm the girl in the red dress. I'm probably not. I'm probably more in the purple top now. I haven't started to go to the green top, i.e. I've shrunk. I'm not quite at that stage yet. I'm in that in between. And think about where you've been, where you've come from, and maybe what your future might look like, and what you want that to be, what you want that to look and feel. And I'll give you more of an example. So it's about planning today so you can enjoy tomorrow. So depending on where you are on that age graph, if you like, you might be thinking about buying your first car or upgrading your car because you're having a baby. You might be planning to take maternity leave. You might be wanting to start a business. You might be wanting to travel, maybe not right now, not today, not next week, not next month, but certainly hopefully maybe next year or later on in the year. You might want to buy a second house, a pied-à-terre that's called. It might be to start a property portfolio. It might want to be to buy your first house. It might be you might be thinking about wanting to save for the future, and when you could retire, maybe reduce your hours at work or semi-retire and choose when or how you work. Or you might have children where you want to maybe play for their university and plan for their future. So depending on where you are in that milestone of life will depend on what you're planning and what you're wanting for in your life. But it's really important to have really clear set goals. In some of the challenges that I run in my membership and in my free groups, we had a challenge back last year where one of my members said, I'm constantly going into my overdraft. I'm always finding that I'm short of money and I want to start saving. I want to start investing, but I can't really do that until I have more of a backup. And I said, okay, well, what you need to do is you need to have a goal or actually something to save for, because when we're just saving for saving's sake, it doesn't happen. Within a few months, and she done the work, I gave her the points she should do and the things that she could do, and she went and did the work. And now she's at a point where she had a goal to take her daughter for a weekend away before COVID-19, and she had a particular amount, how much she needed to save and how much that was per month. And she put the money aside and she achieved the goal. Without that mindset piece around being very clear with your vision and your goals, then you're really planning to fail, if in all honesty. And the same things happens when it comes to future-proofing your finances. It's imperative that you have a clear goal of what you want good to look like. So what do you want to look like in 3 months? What do you want it to look like in 6 months? What do you want it to look like in a year's time, 2, 3, 4, 5? So thinking about your short and medium long-term goals and prioritise them accordingly. If there are any questions, I will be taking a break every now and again. Juliet, you're welcome to jump in if you have anything that's dying. Otherwise, I'm happy to wait to the end. In goals terms, when it comes to financial planning, We don't quite look at it exactly the same way. We start to look at a client in terms of what their earnings are, where they are on the scale, and where they are within their earning capacities. So if you have the age along the bottom, and then you have the income along the top, and then you have the different pieces of milestones, so early childhood, secondary school, maybe having a family, if that's.
I don't think there's any
terms when it comes to. Sorry, let me just turn one down. We don't. Sorry. Muted yourself again. Sorry, because I've got the technology the way it is. Let me just go back. What's happened there? There we go. Let me mute myself on there. Sure. Oh, that's fine. Okay. I've turned my sound down on my phone, Juliet, so that shouldn't happen again. So forming a family, career development, before retirement, and then after retirement. And then we have the income, which is obviously minus when you're younger, although my daughter's always trying to find ways at 12 to make money from me. She's very industrious. And to forming your family into your sort of late 30s, going into your 40s and 50s, where you would more be within your peak of your income. And before you go into retirement, then you are obviously the 60s-ish, 50s, 60s-ish, depending on your planned retirement age. And you do need to think about when you want that to be. And then you have after retirement. So typically, people that are in retirement, we would say that around 60 to 70% of what you earned previously is what you want as an income when you're in retirement. And that's something that people need to plan for as early as possible. So on a hierarchy of needs, we would say that before you start saving for a fancy car, a second home, all these other nice things, you would have emergency savings, and you would start your pension before you start other investments or other ways. Depending on your entrepreneurial strategy, some people are more risk adverse with these things than others. But within that scale, we're thinking about retirement planning, tax planning, investment planning, and protection planning. And I'm going to be talking on some of these subjects as we go through. So that's goals. It's like where you are, where do you want to go, and what do you want to achieve, and being very clear with that. We're going to move on to security now. So a great way to build a really strong foundation is to have certain insurances in place. So I hear all the time where I see things online or speaking to people, clients, where something really awful has happened. And recently I saw, before COVID-19, there was a young mum who was trying to raise money, and her husband had died in a car accident, and they had 3 young children. And I just still can't fathom why somebody like that wouldn't have thought about getting life cover. Now, that's I don't mean to be mean in that situation, because we all make mistakes, things get forgotten, we get busy. But doing the job that I do, I sort of can't get why people don't think about that sooner. But these things are in place to protect you. So if something was to happen, if you're worried about losing your job, unemployment cover, if you're worried about possibly a liability, you take out liability insurance in your business. We insure the car, the cat, the fridge, and everything else, but we don't insure the main way that we make money, which is ourselves. We're like our own cash machine. And we don't insure that. We just insure everything else. So looking at what your needs are in terms of building a security, it means if something was to happen, these what if scenarios was to happen, that you've got some level of protection. Now, I don't believe that everyone can be covered for everything to every degree, because the cost would be quite humongous. But part of my job, what I do with clients, is talking them through, okay, well, what are the what if scenarios and how can we prioritize that? So I've got a couple that I'm working with at the moment. They've given me a budget, and I'm trying to basically get as much as I possibly can within their priorities within that budget. So there's life and there's critical illness insurance, there's income protection. Income protection is like sick pay from work, as we know it. So if you get sick pay from work, then it's like you can have it kick in afterwards. So if work pay you 3 months, it can kick in after 3 months. Or if you're self-employed and you have a sort of tax returns with income on it, you can insure that income if you wasn't able to work due to sickness. So that's where the doctor has signed you off sick. Life cover and critical illness is normally a lump sum, usually to cover a mortgage or to provide a certain lifestyle. So the things that we're looking at is, okay, what would we need for you? So if you wasn't here anymore, what would happen? So if you're a main wage earner in your family, if you was removed from the scenario, what if that happens? What would be the circumstances? If it was you were here but your partner was gone, what if scenario, but what would happen? And then your children. So if a lot of policies, a lot of people have insurances, they don't know what they're paying for, and they actually can have cover for things that they didn't realise, one of which is actually having your children covered, which is an awful thing to think of, but that is really quite crippling for couples, because you're both wanting to take time off, you're both wanting to support the family, you're both wanting to be there, and one of you is not going to want to go to work necessarily. So the other thing is the mortgage. So the mortgage is one of the main debts that people consider, keeping a roof over your head, and it should be. But then there's also lifestyle, so general outgoing. So about when I first started, like 15 years ago, people didn't have such, I don't think, quite exuberant lifestyles, whereas people have a certain expectations around food and cars and houses these days. So it's really important to look at, well, what's important out of those things. And I think what's really interesting that I'm seeing from COVID-19, a lot of people are really evaluating that, and they're realizing that things don't hold the same value as what they used to. Actually, just spending time with a family is actually really important, although it does depend on what day you ask me, because some days I could string my children up. I'm just being honest. I am enjoying the time with them, I must admit. It's nice not having to rush them out the door to school every morning. Then there's choice. So a lot of people talk about financial choice. So how can you future-proof your finances that you have more choice in life? And quite honestly, a lot of it comes back down to basics. I'm not going to be teaching anyone to suck eggs here, but it's the consistency. If you're in business, we all know marketing, getting your message out there and being consistent is key. And the same applies with your finances in many different respects. The first thing is to have emergency savings. So how much would you need? What is your baseline? If you look at your outgoings now and you look at how much is going out for you to keep a roof over your head and food on the table, how much is needed? What is your breaking point? And to have at least 3 to 6 months outgoings in your business account, if that's a business, or in your personal account or in your personal account, what is your breaking point? What then happens, and if we reverse back to 5-6 weeks ago when everything sort of shut down, you're going, it's okay, I've got a couple of months, and the decisions that you make are very, very different. Unfortunately, people with wealth make more money when things are cheaper. So the last recession, most people were still buying and selling, they were still investing, and my clients are still investing at the moment, for example, in the stock market, because stock prices are low. Actually, the more robust you can make your finances, not only more choice it gives you, more leverages it gives you in terms of maximising your long-term position, because you'll be able to find a property cheaper, you'll be able to buy into stocks at a lower rate. But quite often, because there's a lot of fear in the social media and on the press, we're often, we're a bit like sheep. We'll do what everyone else is doing. Although you can't buy houses at the moment because no one can go and visit houses, but you can still invest. So having emergency savings is really, really crucial and a very basic starting point. And then looking at the money management element of your money on an ongoing basis. So we spend just quite frivolly, really, and quite a lot of our emotional connections are to money. If we're feeling quite low, we'll go and buy ourselves, maybe have our hair done. And I have not got an issue with that, but it's having a management around it and a thought process around it. Some people might say, with lots of wealth, well, why bother doing that? I'm happy to give all my money away. And it does come back to your money values. But if you understand what your money values are and you align your money management to your values, you will have much more of an abundant feeling towards your money, and you'll be able to channel your money in a more effective way. What that then creates is clear cash flow pots. So you should have your gifting, where you gift your money away, but you still have money to help you grow and think about your retirement, maybe your children's university and other things. Otherwise, you get to that point and you think, oh, hang on, I haven't got the money to do this. Why haven't I got the money to do this? I've had money in the past. Why haven't I done better things with it? And it's never too late to start. So if those women that are, or men are in this group that are maybe in their 50s and 60s, it's never too late. You can always start somewhere. Now I want to talk about legacy a little bit. So mainly just want to touch on wills. It's a very important point, not just because everyone's feeling a little bit like, well, you know, people are dying. It's a really sad situation that we've got going on here, and I hope those that are listening, you know, you haven't lost somebody yourself, but unfortunately it's part of the culture that we're in at the moment. I hope we never quite get used to losing somebody, I must admit, but thinking about your legacy that you're leaving your loved ones, having your finances in order, having your wills in place, having things in a sort of robust position so that the legacy that you're leaving is that one of, you know, he or she done everything they possibly could. It was really organised. We were, you know, it was made it really simple for us to. We couldn't find anything. We didn't know where it was. We found things months later. The probate process took absolutely months. It meant that the mourning process was that much more difficult. In terms of legacy, I think wills are it's a really important point, and why a lot of people want to make decisions around wills. What a lot of people don't realise, if they're not in a marital position, and they don't have joint finances in any way, that doesn't necessarily mean if you own a house that you have the legal right to it. So if you're in a non-marital situation but you have joint assets, having a will is imperative to have that conversation. Equally, if you have children, either in marriage or not, if something was to happen to either party and you don't have a guardianship set up within the will, then it can mean that your children, that who they go to is dictated by the state, and they can go into social services while that decision is made, because they won't just let somebody walk off with them. They don't know who they are. They're responsible for that child, whether it's their grandmother and they love them and adore them. So having a will is imperative, and it's very much overlooked. Equally to that, in terms of legacy, not only legacy for people that you leave behind or the family members that you want to bequeath money to, is your own legacy for yourself. So we work really hard through, you know, 20, 30, 40 years of our life, and then we get to retirement, and our lifestyle should be that of that much more enjoyment. We don't want just cash in the bank that's, you know, we're going to get taxed on, and we're not necessarily going to earn any interest on, because of the rate of inflation, the way that money grows, it means actually that 100 grand if you've got it, or 10 grand if you've got it, is worth less in 30 or 40 years time, because you've not put it anywhere to grow it. So having a pension is a really great tax efficient way to grow your money. And it's a legacy for yourself. It can be bequeathed. You don't have to put it in a will. You do a wishes, and you can actually leave money to family. A lot of the older style pensions, people used to think that when you died, it died with you. A lot of newer pensions, that's not the case. You can actually inherit the money, and if you die before the age of 75, you pay no inheritance tax. Which, if you have a house that's worth quite a lot of money, you can fall into over the inheritance band quite easily. And that includes investments, so investments of any kind. So when we're talking about future-proofing our finances, what a lot of people are talking about is, well, I've had one stream of my income, whether it's my job, my second job, my business, and it's just stopped overnight. When it comes to investments, you can use investments like, you might be thinking stocks and shares, for example, to help grow, and you can then draw some income out of it. So you can do that. You can, if you've got a big enough portfolio, you could draw some income out, draw your interest out, or interest that you've made in the past. Certainly you can do that. Also, if you're over 55, you can start looking at drawing on pensions, maybe a little earlier if you had to. I've got a client at the moment. She was a senior HR manager, got made redundant just before Christmas, and she's just taken a small lump sum from her pension. It's not ideal, it's not what she wanted, but at the end of the day, she's got to pay the bills. She can't get another job at the moment. So investments do give you a lot more leverage, and they give you the opportunity to create not only a legacy for you, but for the family you leave behind. And you might be thinking about, in terms of, I love it when I see employed and self-employed people have a diverse model of revenue. So you might have a part-time job along with a second job, or maybe a business with several different revenue streams. So for my business, I have a membership, which brings in one revenue stream. I have like one-to-one coaching, I have my group coaching, and they have sort of different client bases. Then I have my investment clients, and I also have things like pensions and things that I do, and I also get an ongoing recurring revenue from the clients I look after in terms of their funds that are under management. So I've got about 5 or 6 different ways that I can earn money in my business. So if 1 or 2 or 3 or 4 drop off, I've still got other revenue that's coming through. So thinking about how you could make that more robust for you, so that you've got a stronger foundation and not just one stream of income. Although when you first start with one, try not to start with 5 when you first start. So that's a little bit about legacy. And now I'm going to just finish main point around mindset. Now, I've gone quite quick so far. I've done this presentation a few times now, so I'm getting quite quick, but I'm hoping that there are some questions towards the end. But it's fine if you're not, but please do if you feel that there's anything coming up for you. The first thing to have is a really strong feel of what your values are. I touched upon that when I talked about management. But what we tend to do is we maybe spend money in a way that maybe it's perceived that others might think that we're wealthy, or it's a nice thing to do for somebody else, or we're spending money on our children, for example, because we want to keep them quiet, make them happy, make them feel loved. But what ends up happening, we get to the end of the month and we actually feel like we've not achieved very much with our money. We feel that we're still actually a bit skinned. But we might not actually be that skin. We might actually feel, might be in a position where we could be better off. So being really clear on what is important to you, how you spend your money. And I think COVID-19 and this time out that we're all getting this opportunity, I'd encourage people to have a really quick look at their finances, see what their spending has been like in the past, and set some boundaries around that going forward, because the mindset around that is really, really crucial. Let go of past expectations, whether it's expectations from your family when you were growing up around, what they expected from you, what their expectations were of themselves. So my family were, working class. They were very Labour supporters. My granddad was in a miner, and they were, not that there's anything wrong being a Labour supporter at all, but I was just trying to give you a bit of perspective. Anyway. You know what I'm saying. My dad was an engineer. My nan worked as a seamstress in a factory. So their expectations of me when I wasn't doing great at school was I'd probably be a receptionist or that kind of thing. And I didn't do great at maths at school either. So it wasn't like I was a mathematician at school, although I am good with figures and numbers. There's an expectation, and it took me a long time to actually remove and let go of those expectations from other people. Avoiding taking action. So people hide bills in drawers, don't log on to statements, don't make phone calls that they need to. And it can be hard at the moment. So it can be made harder by the fact that it might take an hour for you to get through to the Barclays or your bank or your mortgage provider. It can take that much longer, so you then avoid it even the more. It's really important that you get a handle on the finances, especially if there's debt in place, to make sure that people know how you're doing, what you're doing. And if there's terms of taking positive action, so you might have money in the bank and you want to start making some positive shifts and some positive changes, but you're scared not to know where to start. Just taking small actions on reading the odd book, checking out someone's website, maybe joining a sort of a cheaper coaching or membership of some description, so that it allows you to have that growth and be in a place where you're learning and developing. So you're making some sort of positive actions of moving in the right direction. It's never too late. So I see a lot of women particularly that get to a point where they just feel like, well, there's no point bothering now, it's not too late, or they're with their partner and they deal with everything and they just feel that, well, they're never going to get on board, so I'm not going to bother either. I think it's really important to think about, okay, well, often from a partnership perspective, if you've got some money that you want to invest, it is your money, or if there's money that you want to spend in a certain way, then you have every right to do that. But also I find that a lot of the time men or women will tend to then follow rather than being pushed. So it's finding a way to do that in a way of leadership and leading by example. And it is for you. So a lot of people feel like, oh, it's not for me, that's for my Mary down the road who's got a mansion and her husband, works for some big bank. That's not for me. Or that's not for me because I've never did well at school at maths, or that's not for me because I only earn a very small amount. Money mindset, future-proofing your finances is for everybody, no matter who you are, where you come from, or what your own personal expectations are. And anything is possible. So I see some women that have, quite, not affluent backgrounds, and they're earning substantial money. They're doing substantial things with their finances. And I can say that because I see them, I speak to them all the time. So I know anything's possible. So you have to believe that yourself, that anything is possible. So I'm going to go through some summaries now of some actions that you can start to do, because when I do talks, I like to make them as informational and as actionable as possible, because if you're not going to take action and go away and make some changes or some improvements or look at your finances in another way, then sometimes it's going to take you 10 times or twice as long. So if you've made any notes so far, make a note of anything you might want to diarise for the future as a future action. And if there's maybe 2 or 3 things that you're going to do now, then commit yourself and say, right, I'm going to do that one thing. If there's just one thing that you do, I'll be super happy, and I'd love you to message me and let me know how you get on. So some summaries. Okay, what's the goal? So are you looking at the short term, the medium term, or the long term? What is it you really want to believe and to achieve? And think of one for each. So think about, okay, well, right now, X. In years' time, Y. 5 years, 20 years, however your long term is, you can dictate that, X. And start to think about some of the things, small steps that you can start to do today, tomorrow, over the weekend, next week, that you can start moving in the right direction. And I'm sure you'll be hearing from lots of people today where you can get some more fab ideas on that. What insurances have you got in place? So you might have cancelled some, for example, recently with COVID-19. If you've had a lack of money coming in, you might have gone, I'll cancel everything. Now, that's fine when you're talking about Sky and things like that. I'm sure that that's a natural reaction for a lot of people, cancelling direct debits at the second. But it's important, if you've got credit cards and any sort of formal credit arrangements, that you do actually have a conversation with people and pick up the phone and make proper alternative arrangements. Otherwise, you're just going to your overdraft, or you'll have missed direct debits, etc., and they just create more charges. So keeping a close eye on that is important. Try not to bury your head. The closer eye you can keep an eye on these things, the better. But when it comes to insurances and just cancelling things, if you wanted to take that insurance out again, apart from things like that annual renewable things like buildings and contents insurance, you would, if it was anything like life insurance, income protection, anything like that, quite often that contractual arrangement was made numbers of years ago when you were younger, and the older you get, the more expensive it becomes. And also to ensure that you're not cancelling things that could make your situation worse. For the sake of 20, 30 quid, not having certain insurances in place, let's just say contents insurance, but you had a leak that then ruined the telly and the whole downstairs carpet, and you don't have any backup to cover that, then, for that maybe £10-20 a month, maybe it is better to have the right security and things in place to provide you with that foundation and stability. So have a really good think about maybe then what you do need, like what have you not got in place. So what have you got in place? Does it cover you for the right thing? What does it actually cover you for? And then think about those what if scenarios as to what else you might need. We do provide quotes if anybody wants any insurance quotes around any of the things that I've mentioned. But there's no pressure. How much savings do you have in place? So is there a question, Juliet?
No, I was just coming on just to see how you were getting on. There's no questions really that's coming up. People are really enjoying it, but nobody has asked any questions. So I wanted to just say, if they do, they can pop them in the comments and we'll catch them, in relation to the information that you're given. Okay, no worries. Okay, no problem. So savings, so how much do you need? Is it 5% of your salary, that if you save that over the next 6 months, you'd have the right amount of savings in place? Is it £50 a month, £100 a month, £500 a month? Set the expectation, set the goal, and think about what do you need to have each month, therefore what backup do you need? So figure out what your breaking point figure is and how you can achieve that. Is that going to take you 3 months or 6 months? If you have got a will in place, great, make sure it's up to date. If you haven't, then we do have wills available if anybody wants to talk to me about getting a will arranged. Equally, if you know somebody local to your area, obviously they can't come and visit these days at the moment, which is difficult when it comes to witnessing the wills. But at least if you're starting the process, you can formalise it. But there are ways of doing this online now.
check out your pension. So look at what pensions you've got in place. Look at what, if there's 1, 2 old companies. There's some blogs on my website, Evolution Financial Planning, is how to find old pensions. So if you know you've got them, but you don't know where to find them, then check that blog out. If you know where you worked and you know your national insurance number, you can contact the company you work for, or equally, if you know the insurance company it was running the pension, or the fund company that was running the pension, you can write to them. They should be sending you statements, but quite often we move and they change hands, and that can be difficult then to keep up. Think about how much you would want in your pension, and therefore what you might need to top up where you can. So think about that longer term goal and that retirement plan. And even if it's only £50 or £100 a month, I'd encourage you to start somewhere. I do interviews called the Wealth Series, and every woman that I have come on, I ask them, what would you do differently? What would you say to yourself 10, 15 years ago? What advice would you give? What would you do differently? And every single one of them said, I wish I started investing sooner. So I'm not, it's not just me that says that. I'm genuinely saying, please make a start somewhere. Create a habit for investment. So if you're not sure where to start investing or how to start investing, then even if you just say, okay, well, I'm going to invest 2% of my salary, then start creating a habit for that and have that go into a separate account. And then when you get more time, it would have grown, it would have maybe got a few £100 in there, £1,000 in there. You can then start thinking, okay, well, I've got £1,000 to invest. What should I do with it? And it just means you've created that habit, and you've already started, rather than putting it off and then not actually doing anything. And this is a genuine question. What would make you feel calm and confident? So what would make you right now feel fantastic about your finances? Because from a mindset perspective, going back to some of those things that I mentioned, whatever that is imperative. So if that means you getting a pay rise, then go and find a job where you can get a pay rise, or create a second revenue where you can have a second income, whether that's through direct sales is a really good example. I see a lot of people that run smaller businesses, then also running alongside like a direct sales, which is multi-level marketing. You have to be very, very careful with some of these schemes. So it's really important to do your research, make sure they're a registered business, that you're not, get recommendations, speak to people that are actually in the teams. Don't just jump in with lots of upfront fees and not knowing what you're going to get from it, because you are in a sales job, and if you don't like selling, then you shouldn't do it. If it's to have some backup money, then think about things that you can cut off, you can say no to. Maybe don't save for that holiday, and make sure you've got the backup funds in place. So really just touch base with yourself. What would make you feel really super confident and really calm about your finances, and start to think about what actions you can put in place. Now, all of that might seem like quite a lot for some of you. It might feel really achievable, but whatever the case, take all of them, or just at least one action from today that you can take away and start to implement with your finances, and start to future-proof your finances. That's me. I don't think anyone has any questions from before, but they're more than welcome to ask anything if they wish.
I don't think there is any. I'm just keeping an eye on it, Rebecca, and I don't think there is any questions coming in, but it's been really useful.
Been shy.
I think it's one of these topics, isn't it, that people think, oh, I don't want people to know. And while I was listening to you, you reminded me that I need to fill in my paperwork for my tax return and my mortgage reapplication. So I emailed your colleague while you were speaking, because it prompted me to do what I need to do. It's kind of one of these things that we know we need to do, we know how important it is, but unfortunately it gets pushed to the bottom of the pile. And I was sad to hear about the situation, and I see it all the time where people are having to raise money for for sad situations, and I can only assume that quite a lot of people unfortunately do that, where they know it's important, but they think one day I'm going to get the time. It's never really a priority. until it is the priority. And certainly I know from having poor health, you know, a few years ago, it is so important to make it a priority. There comes a stage where it needs to be the top of the list, because nobody knows what's in front of us, and we have to hope for the best and plan for the worst is my view.
And there's always something else to pay for. There's always something jumping up and down, whether it's, I mean, we do tend to do things like, you know, we pay the mortgage and we pay the bills, and but we don't, you know, we're not given financial education at school. We haven't got anyone sort of, you know, saying, a bank manager ringing us up going, you know, what's going on with your bank account? Why are you spending so much on Amazon? That doesn't happen. There's no one to keep us accountable. There's no one to check up on us. So what I try to do with the community, my free community, and my membership, is to sort of be that person to be going, just checking in, how are we all doing? Because it's a good way to, you know, we've got a book club, for example, in our membership this month, and we're talking more about abundance and mindset. Last month we were talking about investing. If you haven't got some form of focus around your finances, we seem to do that with our health sometimes. You know, we have people around us, we're particularly into our health, we have somebody that we listen to around, you know, whether it's a blog or a podcast or something. But for a lot of people, they sort of see finances as something else. It's something else that gets done. The bills are paid, so they're happy. You know, I know people that give a lot of money away, for example, or they don't understand the opportunity. I think that's a lot of the time the issue. So, like, for example, compound interest. So if you have £100 and you get 10% return, the next year your interest is calculated on £110. If you did that for 20 years, you add money. You've got free money. Things like with your pension, you can get 20% tax relief. That doesn't sound that sexy, and you read that and think, well, that sounds boring. And people say to me, you should try and make money and finances more sexy. Well, tax relief is basically 20% free money. Where can you put money into a pot of some description and they give you 20% of what you put in for free? It doesn't happen, right? But because this stuff, education is not given, people don't talk about it, they avoid it. What ends up happening is that they then get to a crunch point, and then they have to look at it, and they're not given a choice otherwise. And it's that retrospective of, you know, I wish I'd done that sooner. And all I'm trying to do, part of my message, is to help more women to look at their finances sooner rather than later.
Absolutely, and such an important message, especially with a lot of women taking time out of work for maternity leave and you know, things like that does have an impact on things like pension funds and investments and different things that they might have going on. So
yeah, and that's happened to me myself as well. I'd stopped paying into my pension on maternity leave. You know, I for a period I earned less because I got made redundant when I was pregnant, so I was out of work for a while. It took me a little while to get back into industry after the last recession. So yeah, we often take roles that are not as financially rewarding, because, you know, they're maybe more care roles or teacher roles, or, you know, that kind of profession, generically speaking. So yes, it does then mean that we necessarily don't have the same level of wealth, and statistically we're doing better. The younger generation of women are doing a lot better, but unfortunately it's women in their 40s and 50s and 60s that are still not doing enough.
Yeah, and I'm just looking at the questions. People are saying, you know, they find having a banking app better because they can see what's going in and out to give them that accountability. There's a lot of fraudulent companies just now as well, and I actually suffered fraud last month in direct debits, which is a bit of a nightmare. And somebody else is saying, you know, great information, and, you know, we all need to look at what's going on with our finances and credit cards and different things like that as well. So I think it's been really useful, although there's not been a huge amount of questions. I do know that people have found that really useful, and it is a hard subject to talk about. I certainly talk about the well-being wheel, which does include finance. You know, it's sometimes more important than other aspects, and sometimes it's less so. It depends where we are at different points in our life, but, you know, it's just as important in the whole, because of course that's what gives us our safety and our security at the very bottom of the kind of hierarchy of needs, isn't it? The roof over our head, the food that we eat, and that type of thing. And once we go up the paradigm, we can then start to look at investments and savings and future planning. So it is very, very important to look at it. So if anyone does have any questions, it'd be good if you give me your link or pop it in the comments under this video, maybe
Sure.
where they can find you in your free group or whatever you want to post. And
Sure.
thank you very much for today.
That's welcome. I've enjoyed it. Thanks for having me.
Great. Thank you.
Take care.
Speak soon. Bye.
Bye.